Everyone. Welcome to the first episode of Beyond Bookkeeping, brought to you by Febi.ai. In this series, we dwell into the world of unsung heroes of the business world, whether it is at HR, customer support, supply chain management, Q&A, or R&D. Today, we spotlight a crucial yet overlooked pillar, bookkeeping. Now let's dive right in and meet our first guest, Ms. Priyanka Sinha, named partner with A&P Partners, one of the most reputed Mumbai-based law firm that I've known for years now. Priyanka, welcome on board. Priyanka, let me ask you first, why don't you share about what you guys do?
Hi, Anuj. Hi, Soumya. Thanks for having me. We are a law firm. We're in full service practice, but between the partner, there is Ankita and I. We have our niche areas of practice. We assist a lot of startups in their drafting agreements with their funding stage. Even from a very inception stage, we kind of onboard startups, provide them with all sorts of advisory, which is required, industry specific as well, and we're working with HNI clients. We're also assisting in like foreign investments. With corporates, we're looking at the disputes part as well, dispute resolution. Apart from the transaction ambit, labor and employment is something which we also look at. Intellectual property is one of the key areas that we're looking at. So yeah, that's pretty much the services that we are offering.
So, and I know personally that you deal with a lot of due diligence when it comes
That's
to
right.
fundraising for startups, right? And
Correct.
this is where I want to ask you about how crucial do you find bookkeeping for startups?
Right.
Uh, is an important factor whether the deal will go this way or that way
Correct.
when they're looking at a fundraising, because again, due diligence, you have to look at the books, you
Right.
have to audit the books,
Right.
but how important do you think that role is, or how important that particular part is, bookkeeping, when you're looking at due diligence?
Right. So, I think bookkeeping, the essence of bookkeeping and the requirement of it is more to understand the financial health of the company. And, at a given stage where a potential investor is looking at a company and trying to gauge whether to, infuse that money or not, anybody would want to have their money safe. So, I think it's a very important tool to gauge and understand and ensure that at least that the records are proper. There are less chances of discrepancies. There's more accuracy involved. So keeping that in mind, I think it's very important when it comes to due diligence.
And Priyanka, in your experience, does it take too long to do due diligence, or do you think the due diligence gets delayed because the books are not in order, or it takes time for them to?
Absolutely. Absolutely. If the books are not in order, it's definitely a time consuming affair because you'll constantly have, anyways, in the entire due diligence process, you've got your condition precedents and subsequent and everything put together. There is this one whole list which comes. The minute that comes for a startup, it's a lot of compliances. So I think bookkeeping is a stage which is a continuous stage that you're adhering to. So at least before you if you think of going for an investment, your house is in order. So you don't need to worry much because despite going for a due diligence, you'll have to comply with everything else. So there is your IP due diligence, your labor due diligence, your corporate governance, everything that needs to be looked at. So I think bookkeeping is the most minimal and the important thing. That's the first round that one needs to have in place before any infusion of money from your valuation perspective, the company's reputation perspective. I think it's very important.
And when you look at the due diligence, matlab, how far or how long back do you go? Like, is it 1 year, 2 year, 3 years, or is there a specific time, or you would go right from the
So,
inception?
see, it also depends at what stage we are doing the investment. And like depending on, if it's a seed stage or if it's an angel investment or a VC coming in. So the period obviously keeps differing depending at what stage the company is looking at. But having said that, you will need to look at least barely 2 years bare minimum to ensure that the company is in a good shape.
And if in that 2 years, if the CA has changed or somebody else has gone, that means
So
that was no longer.
records is the biggest problem for startups. So, and I think most importantly is the supporting documentation. I think a lot of startups fail in keeping the supporting documentation. They probably will be doing a little bit of using things like tally and bookkeeping and all of that. But they probably don't take an expert advice sometimes when it's required or have the documentation in place. So I think that's a major concern
And
for startups usually.
Priyanka, that brings me to the question that what are the red flag items that you have actually seen that people can take it back and say that, okay, these are the 5 items I need to
Correct.
fix it. And remember, we are talking about unsung things, unsung heroes, right? We nobody talks about them. So I want to talk about
Correct.
5 items or 6 items or 3 items that people should look at it
Hmm.
before, which is essential part of due diligence.
Correct. So I think one would be a constant check between your financial statements, your bank accounts. That's one, keep do a time to time check. So I think periodic check is a very important part. And the other thing would be maintaining your invoices, vouchers, looking at suspense entries. So I think that's a very important thing. When you look at these entries and you see that, okay, fine, you're not able to tally where these expenses have gone, all these monies have come where the bank account or the details are not proper. So I think looking at those and trying to clear it off at a level between the founder stage or your accounts or the team which is dealing with it, I think that's a very important thing, because all of these eventually grow to a big bubble. So it's always good to try and solve it at a periodic stage, I believe.
And 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 yes, and I would agree to it with the fact that you already are halfway through your journey of fundraising, and then you are doing a due diligence. That means things are getting closed.
Correct.
Pretty much the pretty much the other party is on the table, right, for you.
Right.
And then if there are red flags or then there are falters over there, uh,
Right.
I'm pretty sure deals would have fallen back or fallen apart.
Absolutely. Absolutely. Reconciliation is a very big problem, which a lot of startups initially probably don't put a lot of their energies into. And that's where, investors, maybe it's all okay, but unfortunate bit is it's not done. So for startups, what they look at it is look at the face of it, right? On the face of it, when they see a concern and they raise it. So I think that's where the issues arise. Probably then you'll have to provide the documentation. So I think it's always good to do your round of checks and balances first and ensure that there is an accuracy before you go to a third party agency, or for that matter, you go to a independent person who's looking at investing in the company and
Uh,
will do their round of checks.
Fair enough. That's a fair call, and and that's the reason why I feel people or the founder should invest in this.
Oh,
This is
absolutely. Because the other reason is the minute it raises concern, it will obviously they'll deter from one making an investment. The other thing, which is it's ultimately it's a valuation game. All of us know that. So then it affects your valuation. It affects your reputation tomorrow. And it's a small world. The ecosystem's
trust,
very
right?
small.
It's
Yeah,
trust, right? You
yeah,
you're
yeah.
putting
And
some numbers.
investors know each other at the end of the day.
Okay,
So
you're putting some sales numbers that does not show up in
correct.
the accounts or does not reflect the right way. There are questions around that, right? So yeah,
Correct. And
you
it delays, I think it delays the funding. Sometimes they just say no to you. Maybe everything's in order. It's just that probably, that's what I said again, the bookkeeping probably was not done in place. So I think these are concerns.
yeah. With this, I would just take one line which is very important, Priyanka, that probably we spoke about for us or for anybody as a founder. It is bookkeeping equals to trust. A
Absolutely.
good bookkeeping leads to a trust, which is both for internal leadership team, internal team, as well as for external stakeholders like investors. So I
Absolutely.
cannot get that right.
And good brand building. It's all interlinked at the end of the day. It's all
Yeah,
building your reputation, if not anything else.
yeah, absolutely. Getting the things audit on the time, it's a reputation, and we have seen quite a
Correct.
few names floating around with not so managing things on time. But that being said, so Priyanka, that brings to me to another interesting thing, AI. Everybody's talking about AI, generative AI.
Right.
Um, we all are surrounded by AI, and there's all good things happening around AI, right? And you know, how do you see a modern technology, especially in AI, transforming a bookkeeping practice in startups? Uh, I would like you to answer in two ways. One,
Hmm.
how does you think that it helps you? And
Correct.
second, how does you think that it potentially can help a startup? from
Correct.
that perspective, right? Both the lenses. I want to see your lens that will it save you time and what will happen to a startup. So I would love to
Right.
hear that.
So yeah, maybe I'll answer the first part, the second part first. So
Sure.
what is it that a startup needs to look at, and why is it, and how technology is going to help, and AI is going to help? So I think one very important thing is fraud detection, which, if at all, if there is anything at a grassroots level, that comes out. So I think that's an important thing. The other thing, for a startup, it would also be helpful because you get a lot of insights with respect to data, right? So there's treatment of data as well, because you're kind of treating the transactions, segregating the data. So I think that helps them quite a bit, because if you're not using technology and it's done manually, or it's done through just an outsourced agency, where there's less use of technology, you won't get these insights. So I think that's very important. And the other thing is, from a reporting perspective, even at a company level, I think it's a great advantage. And accessibility of data and records. So if I want to pull, let's say, 6 months old data, I don't have to wonder about, okay, how do I get it? I need to call my CA, accountant, reach out. It's a platform, right, where you can just download, you can access it. If there is any concern, you just want to look at anything. So I think that accessibility, and so I think that's very important from a startup perspective. And it's all automated, right?
Yeah.
So I think there is ease of using it. So I think that's where convenience is involved. And from a law firm perspective, suppose if I'm helping or assisting a startup in carrying out, for depending on, even if I'm assisting from the investor side, I think the biggest advantage, when I know that, okay, there's been a proper usage of bookkeeping AI, where they've used such technology, I know there is going to be less risk involved. uh, Accuracy is high. I think these are very important things, which I will at least be rest assured that, okay, fine, minimal risk would be probably involved in that.
You
So I
save
think,
time, right?
yes, absolutely,
L-
absolutely.
Less billing per customer.
And
Happy here.
reporting. So I would ensure that, okay, fine, the reporting has, probably because those pop-ups keep coming. So even for a company, they would have missed certain things, but they would not miss everything. So I think that's again a very important check.
Excellent. Thanks, Priyanka. I'm pretty sure everybody's going to take a lot from this episode. And the last one is my favorite, and this is what I'm going to ask you personally, and would love to hear. What does money mean to you personally?
So I think money is more of a safety net, right? So at least and I think the whole journey of money changes once today, you have an organization of your own. From the time, I think, we've worked in law firms and worked in corporates, where we treated money in a very different way. You would receive money at the end of the month. It was about vacation. It was about spending your household travel, and that's about it. But now today, when we look at money, there's more accountability. So you will need to pay your employees, your associates, and your staff before you take money home. So unless and until there's that safety net, you're not confident. I think it just makes you feel very confident. So that's and it's responsibility at the end of the day. So I think that whole perspective has changed over the years.
No, no, amazing. Thank you. Thank you so much, Priyanka. Thank you for taking the time out. I know it's a full working day for you, and thank you for sparing minutes for us. I am
Thank you for
pretty
having
sure.
me. I think it's a
No, no,
great
please,
initiative.
absolutely. Pleasure is ours. Um, we'll see you around on the other side, and I'm pretty sure people are going to take a few good things from what we've just heard from you. Thank you for having
Thank you
day
so
with
much.
us.
Thanks, Anuj and Soumya.